What is up, everyone? Thank you again for coming to Investing City, where we are helping you become better stock market investors so you can make tomorrow better than today. If you haven't checked out our website yet, please do so at www.investingcity.org. But today we're going to go through how to screen for stocks. So a lot of people ask, how do you find good stocks? And of course, that's a $1,000,000 question, and there's definitely a lot of different ways. I'd say the best way is to just look around you and observe the world. What subscriptions do you use the most? What things do you spend the most time on? What are people really excited about? That's one way. Another way is to screen for stocks, and that is something that we're going to go through today. So our preferred screener is probably FINVIZ. So FINVIZ. Just type that into Google right there. And then you'll find finviz.com stock screener. Just click on the link, and it'll take you to this crazy looking page. And at the top bar, the third over, you'll head over to screener. And then we see an even crazier page, and we're like, oh my gosh, where do we start? And so the thing about stock screening is you want to screen for the companies that will fit your edge. As if you've read the Investing City curriculum, then you'll understand what I'm talking about. But an edge is just something that makes you better than other investors. If you're a medical professional, maybe your edge is in healthcare or medical device companies. If you are somebody who knows pop culture really well and maybe consumer goods companies, that might be your edge. If you're really good with numbers, maybe you'll look more at a quantitative basis. So just once you find your edge, you can kind of tailor your stock screening to fit that edge. But for now, we're just going to go over a pretty basic screen that you can set yourself up to find pretty quality companies. And that's what we're here to find, quality companies that we can invest in for the long term, make money, so that we can give ourselves some freedom. And so you'll see in this little bar we have these four things: descriptive, fundamental, technical, and then all. So we'll head over to fundamental because we're fundamental investors looking at the numbers and seeing how that lines up with how the company is doing. And so we see a ton of different things, but as we saw in the how to read a financial statement, we'd preferably like pretty low debt. So we'll just do that, low debt. And what a screener does is gives you this criteria and then filters out the companies that don't meet the criteria. And with that, you kind of have a list of companies that are kind of associated with the criteria that you want. And so that's something that we would like: low debt. Insider ownership, we want a good amount, because if the executives in the company have a good amount of ownership, then their interests are aligned with ours as investors. So let's see, over 10%. Let's see if there's any companies that do that. And as we saw, we had, when we started, about 5,300 companies or so. Can't really remember, but now we have 347. So if you think about it as an investor, you're looking at all these companies. You're like, how am I going to look through 5,000 companies? But actually, if we put down the criteria to better companies, then it gives you a more achievable target in terms of the ones you want to go through. And so we have some insider ownership, low debt. Those are some good things to look for. Let's look at, let's just do the long-term debt as well, just to make sure. And only like 18 more companies went off our list. Let's hope the company has some high gross margins so that they have basically more operating leverage in the future. Operating leverage is just the amount that the company can become more profitable, because let's say somebody like Walmart or Costco has a gross margin of really low. I want to say, I don't know, probably from 10 to 20%. And they still have sales and marketing, and they still have general and administration. But if you're a software company, if you have 90% gross margins, you can spend a lot more money on those other operating expenses. And as you tailor that off, then you become more profitable, and that's kind of what operating leverage is. We can talk about that a little more if that didn't really make much sense. So now we have 80 companies in our universe, and so that's pretty doable. It's getting there, at least. Let's narrow it down maybe even a little bit more. We'll do some sales growth, make sure the company is not negative in the sales growth. Let's be aggressive, over 20%. So now we have 30 companies. That's so much better. Let's see if we can get it down even more. What other things do we want to see? Let's see that they have positive operating margins. Maybe we'll do over 10%. So now we have 10 companies. 10 companies that we can look through and see if they're worth investing in. And so our suggestion would be to go through these companies one by one. Well, first, let's see. If you're comfortable investing in Chinese company, or this company is extremely small, 39 million market cap, this is 52. Let's go back to the descriptive and do a market cap. So it has to be, let's say, over 300 million, because if it's smaller than that, it's pretty hard to make sure those companies are accountable. And let's say you don't want biotechnology. So now you have 3 stocks that you can look at and see if it's worth investing in. And so our suggestion is to just go into those stocks one by one and use the skills you've learned, how to read a 10K, how to read financial statements, and then look at other companies in those industries and see if they're better, and see if they're better than the current stocks in your portfolio if you already own stocks. But basically, this is the way that you can kind of narrow down the stock universe to fit your edge and fit the types of companies that you want to invest in. So these are some pretty quality companies. I actually know these two, IPG Photonics and Qualsys, and I know both of them have performed superbly. So that's just an example that screening actually does work. And so this is just a little bit of lesson in screening. We can go through how to dive into these individual companies in a later video, but thank you so much for taking the time to check out Investing City. Hope you learned something today, and thank you, Investing City goers.